Hello traders. So in this video I want to talk about points of interest. If you have those points of interest that you look for on the chart, everyone has one. These are areas where you're trying to take a trade, but for some reason you tend to find these points of interest, but they just don't seem to work. So in this video I want to talk about the smart money way to identify these POIs and refine them for high probability trades. So I'm not just talking about ordinary POIs. These are areas that you just need to focus on whenever you open your charts. So the only POIs that we'll be focusing on are going to be a fair value gap, which is the most important POI among them all, order blocks, breaker blocks, and also a mitigation block. These are the only POIs that you need to focus on. Okay, so the first and most important point of interest that you need to be looking at is going to be a fair value gap, in short FVG. So this is very important because other points of interest, they need an FVG for them to be effective in the market. Okay, but an FVG can just stand on its own. So what is this fair value gap? A fair value gap is an imbalance in price action created when the market moves aggressively in one direction, leaving a gap between candles. Okay, so it's not a complicated thing for you to spot. It's very, very easy. So how do you spot these fair value gaps? You just need to identify a strong bullish or bearish candle. In this case, we have a bearish scenario, meaning you just need to identify a bearish candle, a strong bearish candle. What I mean by that is you need one candle that is going to stand between this candle and that candle that is going to leave a space. That is a strong bearish candle. So if the next candle does not fully retrace into the previous one, an imbalance is formed. You can see this candle's low here and this candle's high there. There's that distance. They are supposed to touch, but there was a distance that was left because of this strong move right here. Okay, so the gap is measured between the high of the first candle and the low of the third candle. A third candle and a first candle can be interchangeable. Okay, you can treat this as the first candle and this one as the third. You can treat this as the third. You can treat this as the first and this one as a third. Okay, it really doesn't matter as long as you are looking at a gap. So what they are talking about here is you have that first candle's low and you have that third candle's high. You can clearly see that gap there. Okay, so the moment you have that fair value gap, what you are looking for in terms of the point of interest is for price to retrace into that point of interest and try to find an entry setup right in that fair value gap. And this is how your expectation is supposed to be. Price is supposed to rebalance the imbalance that was there. It doesn't need to fully fill up the whole fair value gap. Okay, so that's what you need to know about fair value gap. Let's go to the next. Okay, so the second point of interest that I'm going to talk about is an order block. So order blocks comes in two forms. There's going to be an ordinary order block, and then we're going to talk about the second one. So this first one, an ordinary order block, is just an order block that forms right near the fair value gap. Okay, so when there's a fair value gap like this one here, you don't just expect price to go into that fair value gap and go your way. Of course, that can happen. It happens quite a lot. Okay, but there's also going to be a candle right above that fair value gap. So this candle is very important. It can be a bullish candle, it can be a bearish candle, it doesn't matter. As long as there's a candle there, you need to look at this candle, okay, and treat it as a point of interest. Sometimes you won't have a setup in the fair value gap here, but there's going to be this candle right above it if you are in a bearish scenario. So this is an ordinary order block which forms near a fair value gap and acts as a potential zone for smart money to re-enter the market. So why does this one work? It works because price often fills the fair value gap first before reacting to this order block. It also acts as a strong point of interest when you combine it with liquidity. We are going to talk about that later in the video, okay? And it also works best when it aligns with market structure. All right, so if you know market structure, you know if you're in a bullish scenario, you're looking for a bullish ordinary order block. Yeah, if you're in a bearish scenario, you're looking for a bearish ordinary order block. Okay, so you are always going to have this fair value gap if you are looking for this ordinary order block. Now, when you have this and then price goes into that fair value gap, this is your expectation. Okay, you expect price to react to that fair value gap and then just drop to the downside, which is just a normal expectation. But sometimes you see that price can completely fill up. This is an imbalance. Okay, so price tends to rebalance the whole thing. Okay, and the way it can do that is by going into that order block to completely close this gap right here. So this is why the candle that is just above the fair value gap or below the fair value gap is very, very important. Okay, let's go to the next form of order block. Okay, the next form of order block, which is my personal favorite because it keeps popping up almost everywhere. Okay, this is a single candle order block. So just as the name suggests, a single candle order block is a special type of order block that involves a liquidity sweep, okay, followed by a strong confirmation candle. So the reason it's called a single candle order block is because it can stand on its own. It doesn't need a fair value gap for it to be called an order block. Okay, this can also be called a hidden POI. I'll explain why. Okay, so how do you identify these single candle order blocks? First, you just need two things. Okay, it's just two things, it's not something complicated. You need a liquidity sweep first. Okay, for a bearish single candle order block, the candle sweeps the high of the previous candle. That is all. So when a candle sweeps the previous candle's high without closing above, okay, and then in a bullish scenario, you need the candle to sweep the low of the previous candle. For the confirmation, for bearish single candle order block, you need the next candle to close with a full body below the previous candle's wicks. I said wicks, not wick. I'll explain why I said that, okay? For a bullish single candle order block, the next candle closes with a full body above the previous candle's wicks. All right, so this is how it looks like. When price is moving, and then you have, this is in a bearish scenario, okay? You have that high swept. This body did not close above that high. It just swept that high and then continued going to the downside. Okay. Now, here we say that in a bearish single candle order block, the candle sweeps the high of the previous candle. That has already happened. And then for a confirmation, for you to call this a single candle order block, you need the next candle to close with a full body candle below the previous candle's wicks. This next candle did not close below the wick here. Okay, so this is not a single candle order block yet. When this candle comes and then close below all these wicks here, this is why here it's written wicks, not just wick. It can also be wicks. So the moment that happens, then you have a single candle order block. This is confirmed as a single candle order block. Now, as you can see, there is no fair value gap right here. Okay, you can have another candle here. There's no fair value gap here, but you still have an order block. So when you expect price to go back into that, you don't start looking for where there's a fair value gap. Sometimes you are going to have a single candle order block with the fair value gap down there. That is good for you in terms of confluence, but you don't really need it. Okay, in this case, this is also called a hidden point of interest because some traders find it really hard to find a single candle order block. So when price goes back into that single candle order block and you go down to your lower time frame to look for that entry setup, this is what you need to expect to happen. Okay, let's move. Another point of interest that is really important is a breaker block. So this breaker block, this is the simplest explanation I could come up with. Okay, so a breaker block is a former order block that initially failed to hold price. Okay, an order block that failed to hold price. So it forms when price first takes out a swing high or a swing low, grabbing liquidity, then violates the order block instead of respecting it. Okay, when price later returns to this same level, it now acts as a strong support or resistance, providing a high probability trade setup. So this is what I mean. When price is forming, okay, price is forming, and then you see that swing high taken out there. You can see price taking out that swing high. All right, that it's going to be very important that you notice this. All right, so price continues going to the downside the moment price takes out this low here. So with breaker blocks, what you are looking at is the last, since we are in a bearish scenario, you are looking at this last candle here. Okay, it doesn't need to have a fair value gap or anything, you just need that last candle there. Price tends to go back to these last candles and respect them. Okay, so once that happens, you can mark that as your breaker block. So what you're expecting is for price to go back into that breaker block and respect the break. So you can now go down to the lower time frame and start looking for a sell setup. Okay, now these breaker blocks, like I said, only a single candle order block is allowed not to have a fair value gap. These breaker blocks, I see a lot of traders making this mistake where you just mark this breaker block without having a fair value gap in front of it. So when it comes to, in terms of confluence, you need a breaker block to be in line with a fair value gap. It's going to be a high quality point of interest. Okay, most of those you won't see price going through that breaker block. Okay, so once you see that fair value gap there, at least you are going to have a breaker block plus a fair value gap, which is going to be a high quality point of interest. So now, when these two align, you can now wait for price to go into that both fair value gap and breaker block. Okay. After you look for that entry setup, then price, yeah, can do its thing. It's not a really complicated concept. Okay, let's go to the second one. Now, the reason I say let's go to the second one is because this one is similar to the breaker block. It's called a mitigation block. Okay, Even this one, this is like the best explanation I could come up with. I want to make it as simple as possible. So this one is similar to a breaker block, but with just one key difference. Price does not take out liquidity. You saw how before a breaker block forms, price first takes out liquidity, either a swing high or a swing low. But for this one, there's a failure swing. Okay, so it's exactly like a breaker block, but price does not take out liquidity first. So this is how it forms. All right, you can see price going to the downside. Okay, so in this case you're expecting price to maybe push to the upside and take out that swing high, but for some reason price doesn't take out that swing high. Instead it makes a failure swing. So this failure swing is going to be very instrumental, all right, because when price takes out this low now, after failing to make a swing high there, this last candle right here, this last candle is going to act as a mitigation block. Okay, so when price returns to this failed level, smart money mitigates the previous positions. Okay, they mitigate the previous positions, and the area is going to act as just like in a breaker block. This is going to act as uh, it's going to be resistance in this situation, since we are going to the downside. So once you mark that as a mitigation block, it means you expect price to give you a sell setup. Okay, when you go to the lower time frame, you're expecting price to give you a sell setup right there. Okay, now just like the breaker block or any other order block except for the single candle order block, even this one you need it to be in line with a fair value gap. You can see that fair value gap there is going to be high quality. I would advise that if you don't see any fair value gap in front of a breaker block or mitigation block, please just leave it. Okay, you'd rather just wait for another point of interest. All right, otherwise once you find that sell setup in there, okay, you can easily enter and price is going to do its thing. This one is also not complicated. So now let's try to go to liquidity pools around these points of interest. This is the last point of interest I'm going to talk about. So all these things are useless if there's no liquidity pools around them. Okay, for high quality trades you need liquidity pools. So let's just go there. Okay, so the first kind of liquidity pool around a POI that you need to really be able to identify is the previous candle's high and low. The candle that I'm talking about is the daily candle. So every time a daily candle closes, it leaves liquidity on top and on the bottom. When you have a daily candle like this, you just need to concentrate on where is the previous day's high and where is its low. So when today price opens, the opening price is going to be here, since this is a bullish candle. Okay, so when price opens, your target is going to be where the price takes out the previous day's low or previous day's high. Now it's not always that you have to do that. Okay, you also have to put into consideration the daily bias. Okay, I will explain that in the real chart. So when price opens like this and then takes out the previous day's high, and then your daily bias is saying you are bearish. Now you have to start looking for that point of interest because price has already taken out the previous day's liquidity. Okay, so that point of interest formed after taking out liquidity. So the only thing that is remaining for you is now to look for an entry setup in that point of interest. Okay, this is a high quality trade. You are going to see examples in the real chart if you just stick to the end of this video. Okay, so when price now works out, if you want, it's not always that price is always going to target this previous day's low. Okay, but it's important to keep in mind that price can go all the way to that low there. So if you are one of the traders who is really good, they have a lot of patience. I don't, but if you have a lot of patience, and even if it doesn't matter how big that previous daily candle is, okay, as long as you have enough patience and there's enough liquidity down there, you can hold your trade all the way to the downside there. All right, so just remember, as long as price has already taken out that, okay, and price is saying bearish daily bias, that point of interest, when it forms, is going to be of high quality. It can be a fair value gap, can be an order block. In most cases, it's going to be a single candle order block. So just keep that in mind. All right, let's move. Okay, so another really important liquidity pool that you need to be looking out for is going to be equal highs and equal lows. So these are called buy side and sell side liquidity. If you have equal highs, that is a buy side liquidity. If you have equal lows, that is sell side liquidity. So the reason this works very, very well is because of people that trade support and resistance. There are people that put stop losses above equal highs, and there are people that put stop losses below equal lows. All right, so when you have equal highs and equal lows, what you are waiting for, this is a consolidation. All right, but instead of you looking at this as a consolidation, you need to be looking at this in terms of liquidity buildup. When you see price not going anywhere, just playing around a certain level, wait for price to take out either buy side or sell side. Okay, and in this case, when you see price taking out sell side liquidity, which is those equal lows, what you need now is a point of interest where you are supposed to start looking for now for a potential trading entry. Okay, so when you are given a point of interest like this one here, even after having that POI, you still need somewhere where you need to get out. Okay, that is the point of liquidity pools around POIs. This sell side liquidity, it gave you a potential entry area, entry zone, which is a point of interest. Okay, but even when you enter a trade, you still need somewhere where you need to get out. You are not just holding a trade forever. Okay, this is where these equal highs are going to be very, very useful. So when you enter here, you can try to hold all the way to those equal highs. That's going to give you a perfect target for you to get out. All right, so all this is going to be illustrated on the real chart. So let's move. All right, so the other one is going to be a trendline liquidity. So this one, just like the term suggests, it's a trend line. Whenever you see points that are going to, you just need 2 points, okay? Not even three. You just need 2 points. And then when you're trying to look for that point of interest and you already have this trend line just before a point of interest, that point of interest is going to be of high quality. It's going to be a high probability point of interest. So in this case, if maybe you are marking your market structure, you are marking your breakout structures, your whatever, this can also be a bonus liquidity pool. Okay, inducement. If you know market structure, you know what inducement is. So if you have a fair value gap an order block, whatever it is that you have down there, as long as it's a point of interest and price is moving like this. Okay, so what you need to wait for is for price to take out this trend line liquidity first. Okay, even if you had another order block maybe up here, that order block is very low quality. Okay, what you need is for price to take out liquidity first before it can tap in a point of interest. So when price goes into that point of interest, taking out trendline liquidity and even inducement if you want, now if you are lucky enough, you are going to have something like that. Eco high is up there. This can be a really good target for you. Okay, so this is how liquidity works. It's not just about you finding your points of interest. No, it also works when you're trying to find your target, your take profit targets. Okay, so in this case, since you are even anticipating a break of structure to the upside there, this is going to be good for you. So when price starts going to the upside like that, if it breaks through right there, if you don't have another target profit, this can be your final target because price has already broken structure to the upside there. Okay, so this is how liquidity works with points of interest. It's very, very important that you master point of interest. Okay, let's move on to another one. All right, so the last type of liquidity pool that you need to identify around the point of interest is a high time frame fair value gap. So a high time frame fair value gap is going to be very, very instrumental. Sometimes you won't have a good market structure mapping, okay? A good market structure direction. You won't have it. But when you have a higher time frame fair value gap, that is going to make things simpler for you. So when I say higher time frame, for me personally, I start from 15 minutes going up. But the higher you go, the greater that fair value gap, the greater and higher quality that fair value gap is going to be. Okay, so the highest that I go for is the daily fair value gap. So when I'm in the daily fair value gap, okay, and then price is already approaching that fair value gap. When I go down to the lower time frame, the only thing that I'm expecting is for price to give me a lower time frame point of interest because price is already in that fair value gap. That higher time frame fair value gap is also called internal range liquidity. Okay, so as long as I'm already in there, the only thing that I'm waiting for is for price to give me that lower time frame point of interest. And when it does that, I have to look for a sell setup since we are in a bearish point of interest here. Okay, I have to look for a sell setup. Even when that happens and price actually goes my way, remember we are talking about liquidity pools around POI. So we are not just talking about the entry level here. Okay, even the target. So when you just look at this, you just be looking at this like it's a random price movement. No, if you want to enjoy trading, you can also start doing this. Okay, so even before you enter there, at least you have something down here telling you there was trendline liquidity here. So when price dropped to the downside here, you have to, oh, okay, is there something else that I need to be looking forward to? If you look down here, you have those equal lows here. Okay, so when price is moving, in most cases, you'll see if it's willing to go to where you want it to go, it will engineer some liquidity before it goes there. It helps it drop really, really fast. Okay, if price doesn't have any liquidity where it's going, there's a very slow movement, and in most cases it won't even go very far with that movement. That's a really boring trade. So you just have to be aware of the liquidity pools that are surrounding your point of interest. Let's try to go now to the real chart. All right, so we are on the US 500. So this is the daily chart, and I just want to show you how the daily liquidity candle can work to your own advantage. So of course, you don't just need to look at the candle and then be like, okay, price has already taken out yesterday's low, so I'm trying to buy. Price has taken out yesterday's high, so I'm trying to sell. No, that's not how it works. You also have to put in daily bias into perspective. Okay, so price was already pushing to the upside here. Okay, price was already pushing to the upside here with a full body candle close above there. So when price here took out this low here, and the reason I'm looking at this is because if you look clearly, this is an inside candle. Okay, of course, price even to, you can use that if you want, but I would rather use the main candle there. So this is the low. This is this candle's low right here. Okay. All right, so that law was taken out. So the only thing that you need now is for you to go on the lower time frame to look for that point of interest. Okay, so I'm going to use the 15-minute chart. This is my analysis time frame. Okay, so right here, this is where we are. So if you when you look at this, of course you are not just trying to look for a random point of interest. Okay, you are not trying to look for a random point of interest. What you need is for price to be surrounded by liquidity. Already price has taken out yesterday's daily low liquidity. So when you look at this and then pair it also with trading session, this is 9:30, which is a New York session. Okay, and then when you look to the left here, there were some equal lows here. This is sell side liquidity. Okay, they are relatively equal lows. So if you want just to add to your confidence, you can add equal lows. Okay, even write sell side liquidity. Okay, so when price did a turtle soup here, when price took out all that liquidity down there, at least you would understand why price would just start going to the upside here. So for a point of interest, I already showed you, okay, one of the points of interest, which is a single candle order block. Okay, price took out the previous candle's low and then another candle closed above that. So the only thing that you need to do here is to draw that single candle order block like that. Okay, that is a single candle order block. When you do that, what you need is for you to find an entry setup on the lower time frame now. Okay, I don't want you to be entering directly on the analysis chart because the stop loss is going to be way too big. So you'd rather just look for a buy setup right in that single candle order block on the lower time frame, like the 1 minute chart. Okay, even your stop loss is going to be based on that. So when you find that buy setup, now you can wait for price, okay, to kill the buy side liquidity now. So if you look closely here, these are not just random movements here. Okay, there's always something that price is trying to give you. So I already gave you, okay, trend line liquidity, and this right here is your trend line liquidity. Okay, this right here. So you don't have to be confused or trying to force like the targets. When you see price trying to push to the ups, at least you need to understand why it's doing that. So when you already have trend line liquidity like that, okay, you have trend line liquidity like that. So the only thing that you need when you've already entered here is for price to take out that trend line liquidity. Of course, this is not just going to be your only target, okay? You also have that high all the way up there. That is external range liquidity. So the only thing that you are doing here is taking out profits. If price is already moving your way, you are just taking off profits. Okay, if you know me very well, I wouldn't hold my trade all the way to that high. Okay, because I know myself, I know my patience is very, very low. So this is one liquidity pool, okay, that we talked about. So let's go to the second one. Okay, so we are on gold USD, and the only reason I'm putting this in this playlist is because some of my students got this one easily, and I just think it was nice. So yeah, so whenever you see price doing this move where it's just clustered around a certain area, this is a liquidity buildup, and when you see this, it you need to look at this like jackpot. Okay, this is a big liquidity pool, and the only thing you are waiting for is price to take out buy side liquidity or sell side liquidity. And in this case, you can see down here there was this trend line liquidity here. Okay, and price works with time, never forget that. So when price took out this trend line liquidity, which is sell side liquidity, what is supposed to be running in your mind? Price has already taken out sell side liquidity. So what I need now is buy side liquidity to be taken out. Okay. Now, where is my point of interest? Don't forget, we are talking about liquidity pools around a point of interest. And again, we have a single candle order block here. This is why I said this is my favorite point of interest because it appears almost everywhere. So when you have that single candle order block, you still need price to go some place. Okay, you don't just because there's a single candle order block, it already took out sell side liquidity. Okay, now I can just enter. No, first of all, you have to find a buy setup here. Okay, once you find that buy setup, then you can enter and then target buy side liquidity. And in this case, you can see up here there are equal lows there. That's a lot of buy side liquidity. So once that happens, you've already identified your buy side liquidity. When price takes out that buy side liquidity, if you want, you can choose to just close the whole thing. Most of my students like holding trades. I don't know why. I don't have a lot of patience to hold trades. Yeah, but that is fine. So when you go to, okay, this is just a bonus tip. When you go to the daily time frame, you can see price was in a bullish bias because this closed above the previous candle's high. Now when you look at where those equal highs were, they were just right there. Okay, on that high right there. This is not a coincidence or anything, guys. Okay, price tends to react a certain way and move in a certain way, not by coincidence. It's all intentional. There's nothing like coincidence in trading. If you think it is, it's going to be very hard for you to move really far in trading. Yeah, so let's also look at another liquidity pool around a POI. All right, so for the last kind of pool of liquidity around the POI, I'm going to use the volatility 751S index. For some of you who trade the synthetic indices. So, okay, so you can see price is already, this is where we are. This is the daily chart. So for the hard time frame fair value gap, I'm going to use the daily chart, and you can see price has already respected this fair value gap. This is the current market, current price. It respected this one here and also this one up here. Okay, yeah, but the reason I want to use this one here is because there's this breaker block. So even on the daily chart, you have breaker blocks. If you remember from from those drawings there, you see price going down and then it breaks that swing high and then drops to the downside. But you have this last candle right here. So this guy right here is a breaker block. Okay, this one right here. Okay, I just wanted to point that one out and why this was a high quality trade. So on the daily time frame, let's just mark it here. That is the daily fair value gap, our hard time frame fair value gap. So when you go down to your analysis chart, my analysis chart is 15 minutes, and you don't have to use 15 minutes. Okay, I just like 15 minutes, and sometimes I even switch it up to 30 minutes, 1 hour. Yeah, so you don't necessarily just have to be using 15 minutes. No, that's not the standard or whatever. Okay, so you can see when price went back to this daily fair value gap. Okay, now before you even look for that POI, remember the point of this video is we are trying to find liquidity pools around a POI. So you have something here. Okay, they are not exactly equal, but they are relatively equal, but you can still use that. Okay, you can see this point, and this point. So that is a liquidity pool. Okay, so you have equal highs. So in this case, you already have a buy side liquidity, and price has already entered your daily fair value gap, which is even bearish. This is good for you, okay, when you are looking for that point of interest. Now, before you even look for that point of interest, also you need some place where you have to get out. Okay, a target. I always want to have a target before anything else. Okay, so down here what we have are equal lows. Okay, so we can use that as our target. Okay, right there, they are relatively equal. Okay, just there. All right, so when you enter, immediately you enter, at least you have somewhere where you can get out. Okay, it's very easy for you to get out of this trade because you have equal lows. Okay, they don't have to be exactly equal, they just have to be in the same range at least. All right, but they shouldn't be way too separate because that won't make any sense. That is sell side liquidity. All right, so again, there was a single candle order block above here. Okay, right in that daily fair value gap. So that was this guy. Okay, and there was a fair value gap just down there. So if you're looking for a sell setup, you can start looking for it in that small fair value gap there. Okay, also again, they are not exactly equal, but you can draw that one out if you want. Okay, just there. Okay, but the most prominent fair value gap that you want to draw is this one right here. Okay, this guy right here. Okay, this one, at least it was obvious. Okay, so when you are drawing those liquidity zones, I mean, you can draw anything that seems to be respecting a certain zone, but try to draw the ones that are way too close and too uniform. Okay, it's going to be better for you. At least it won't be looking too random. Okay, you can see I deleted this one. It looks like price was respecting this area right here. Okay, some people trade these areas. Okay, some people try to trade these areas. So yeah, but you'd rather just draw these ones that look really uniform. Yeah, at least your chart is going to be looking more smart. I don't know if these ones are equal. Let's see. Oh, okay. Yeah, I'm making my chart so dirty right now, but yeah. So here, this is some engineered liquidity. This is why price even moved way too fast here. Okay, we have equal lows, that is sell side liquidity. So the reason you are just targeting sell side liquidity is because buy side liquidity has already been taken out, and you already have a point of interest in another higher time frame fair value gap. Okay, so your goal here is for you to have confluence, a lot of stuff coming together. Okay, that is what you need. It's going to be easier for you to hold those trades because the only thing that you'll be doing is targeting this sell side liquidity here. Okay, so in conclusion, guys, try your very best to start with liquidity. Okay, price doesn't just move by coincidence or just by luck. No, price just ended up here. No, price doesn't do that. There's always liquidity where it's going. So just try to identify these liquidity zones so that when you are looking for these points of interest, it's going to be easy for you to hold a trade when you actually find a sell setup or a buy setup somewhere. All right. Yeah, so you can just wait for another video. Otherwise, when it comes to liquidity pools around POIs, this is all I've got. All right. Happy trading.